encourage all of you, man, to take this serious, really go through this information, really lock in and pay attention to everything that we share on these sessions. These sessions are going to be facilitated by myself and Mr. Kirtland Seal over the next about 4 weeks. And we're going to be as detailed as possible, all the things that in the beginning, as a beginner, it seems obvious, but it's usually not that obvious, right? A lot of things that, it should be apparent to individuals, we are literally going to spell them out in these sessions. Okay. So we are going to cover from literally what is Forex, like the very basics of it. So whether you might have some experience or not, maybe there's some information that you did not know, that is absolutely fine. I see nothing wrong with going over, the information, to make sure that you actually do have it, right? So we are going to be covering, like I said, from the very basics of what is Forex, right away through. So you are going to get an understanding on these sessions on, like what's a pip. You're going to get an understanding on, what are lots. You're going to get a basic understanding on, market structure as well. Right. And I think what's very, very important, before we really go ahead and dive all the way into this information, is that you really understand the mindset that you need to carry, okay, or the way that you need to look at this information, right? I know sometimes what could happen is, because of the way that we got exposed to Forex, right? You guys can let me know, of course, in the chat. Just let me record this session.
Recording in progress.
Because of the way that we got exposed to Forex, I know that sometimes we could think that this is some sort of, like shortcut to the money, right? Like it's just, I mean, yes, of course, don't get me wrong. Of course, you can make a lot of money trading. You can do really well in the Forex market, but I think that what happens is that individuals tend to have the wrong perspective, right? They tend to think that this is just something that you do, boom, and pops up, like a lottery ticket. Let me put it like that, right? And I want to help you with the mindset, right? I want to help you, with the way that you actually look at this information. First and foremost, the mindset that you want to carry, right? Because I think it's very important that you see this through the right lens first and foremost. Okay, is that okay? All right, is that okay? And let me know, like, am I sticking, or are we all good? All right, so let me know if we are all good. Just put all good in the chat if we are all good. Okay, awesome. Appreciate you. All right, cool. So, few things. All right, and I want you to get a notepad, get a pen, get a smartphone, tablet, something, as we start to jump into this information. I know sometimes persons only take notes on the things that persons tell them to do, but they don't take notes on the things that really, really matter, and that is how to think, right? And like I said, I want to start first with really having the right perspective when it comes to Forex, right? And I want you to write this first thing down, all right? Forex is a skill. It may sound obvious, Forex is a skill. All right? It's a skill. And it being a skill, it requires you to study it. Yeah, it requires you to study it. Matter of fact, write this down. All right? Forex is also a profession. Okay, it's also a profession. So just like you would any other profession, just like you would any other skill, it's going to require you to study it. It's going to require patience. It is going to require discipline. Okay, it's going to require patience. It's going to require discipline. It's going to require you studying it. And also it's going to require practice. This is not something that is going to happen by chance. Okay, you've got to be intentional about learning it. All right, you got to be intentional about learning it. So that's the first mindset I want you to carry. Because like I said, some of you might have got exposed to Forex and it might have been somebody's screenshot of their profits, right? Maybe you saw someone make a massive withdrawal and that got you inspired, right? And that's all well and good. That's all fine. You know, there's nothing wrong with that. But, you know, you got to get the backstory behind it. Yeah, you see the end result. You know, money is the end result, but, you know, there's a process to that. Okay, there's some studying that gotta take place. There's some practice that has to go into play. Right? There's some discipline that gotta take place. Right? And I want you to understand these things, you know, and really treat this seriously. Really take this industry seriously. I think it's so downplayed. An industry that generates over $9 trillion every single day. Do you guys know that Forex is one of the most liquid financial markets in the entire world? Right? I mean, the entire world generates $9 trillion every single day, right? Every day, not, you know, a year. This is daily. $9 trillion is generated in this industry of Forex, right? So when I say take it serious, I'm talking about that kind of serious, right? 9 trillion. Like what industry? Think about it. What industry you know of that generates that type of money on a day-to-day basis? It's the largest financial markets in the world. It makes the stock market look like nothing, right? The stock market does about 200 billion a day. This is 9 trillion a day. Yeah. You could combine the stock market. You could combine the sports industry. You could combine the music industry, and it can't even like come into comparison with the Forex market. So understand the magnitude of this. Understand how massive the Forex market is. So when I say treat this seriously, I'm talking about that type of serious. Right? You know, this is not a thing. Yeah, this is a profession. This is a skill that if you learn it, it could really, really, really change your life. Right? Here's another mindset that I want you to write down. Losses are part of trading. All right? Losses are a part of trading. Yeah. Listen, at some point, you're gonna lose. So if we got any sore losers on the call, anybody's like a sore loser, like you hate to lose, all right? Let me know in the chat. If you hate to lose, you're that person like, man, you know, like I want to just win, right? You hate to lose. Let me know if that's you, right? Because watch this, you're in for a rude awakening. You are going to lose at some point. The best traders lose. I lose. Right? I'm not saying I'm the best, right? But I lose. I take losses. Okay, I take losses. You are going to lose. Losing in trading is inevitable. Yeah, it's inevitable. It is all simply a part of it's all simply probability. That's what trading is. It's all probabilities and risk management. So there are some trades that are going to be more probable than others, right? There's some trades that are more likely to play out than others, but trust and believe at some point you are going to get it wrong. Or you may get it right and the market does something completely different, right? So you're going to lose. So here's the thing, right? The goal is not to avoid losses. The goal is to simply lose well, right? The goal is not to avoid the losses. The goal is that when you actually do lose, you lose well. I hope you guys are taking notes of these things, okay? When you do lose, you lose well because it's going to happen. You can't get away from it. It's inevitable, right? Don't be like me. When I first started, I disregarded everything. I disregarded everything. Right? I heard someone said on a training session, risk 1 to 3% of your trading account per trade. And I was like, 1 to 3%? It's like, bro, listen, I come here to make money. You're telling me about 1 to 3%. All right. I look into risk 50%, 70%, 80%. All right. I look into go in full 100%. Anybody's like that, right? But don't be like me, all right? Don't be like me because that came with a very hard lesson. You know, that came with some very, actually some terrible lessons, right? And that was like just blown accounts, losing money over and over and over and over again. Don't be like me, man, because that's a very right? That's a very hard lesson to learn, right? Like it's a very costly, literally a very costly lesson to learn. So you don't want to be that person, okay? Because it's very easy to treat this as though it's a gamble. All right. Like you don't want to be, you're not here to gamble. For us, it's not a gamble. You're making educated decisions based on data, all right, based on information that is presented to you. All right. Here's another mindset. All right. Here's another thought process. Consistency is more important than the big wins. All right. Consistency is more important than the big wins. So if we come into trading and we're thinking, man, this one trade is going to change my life. Right. You want to hit home runs. Listen, get base hits. All right. But watch baseball. Right. All right. Let me say it for the Caribbean people. All right. If we here in the Caribbean, right? Cricket. All right. Watch this. As opposed to swinging, trying to hit a six, just get a run. You know what I mean? Just get a run. All right. just run. As opposed to all the time you trying to swing and hit a six, right? Just get a run. All right. Maybe you could get a four. You know what I mean? But stop trying to smack all the time trying to hit sixes. Okay? It's more about consistency over these big wins, all right? Over these big buys, as some of us would say. Okay? We get excited when we see somebody making a significant amount of money on one trade, but we don't know what the other traders look like. They may make a significant amount of money on one trade, and then next trade is a significant loss as well. Okay? Consistency is the focus. Or I'm not saying that there's going to be times, or there's not going to be times that you go on, you make a big set of money from one trade. Granted, yeah, like most of my money made from one trade was like 30,000. All right. So, like you have that, but it's not going to be like that all the time. There's going to be times that you do 1,000, right? Maybe you do 100 today, maybe you do 100 tomorrow. Imagine you do $100 every single day for 30 days. You walk away $3,000. All right. Imagine you do $1,000 every day for 30 days. All right. That's 30,000. Right. Focus on consistency. That's what I want you guys to focus on. So see trading, right? See this, write this down. Trading is a long-term game, right? It's a marathon, not a sprint. Okay, it's a marathon and not a sprint. Okay, it's a marathon and not a sprint. If you focus long-term, I'm telling you, you're gonna be all right. Because if it is one thing that's gonna pass, it's time. And we get so caught up in this microwave type of success. We want it no, 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 no. Right? And that's the world that we live in. We live in a world where everything's happening no. You put it in the microwave, you get it no. You got fast food, right? Like everything is no, it's instant. If it's not instant, if it requires patience, right, then we get antsy. Then we don't want to go through the process. So, trading, just remember this, it's not you're not gonna learn this in like 30 days. All right, it's gonna be a process. It's gonna take some time. It's gonna take some practice. Remember what I said at the beginning. It's gonna require practice. It's gonna require discipline. All right, it's a journey. It's a marathon. It's not a sprint. Okay, it's not a sprint. It's a marathon. So of course, when you think about it, a marathon, may include, various sprints. All right, but it's never just this one situation, that's going to get you to where it is that you want to be. Guys, I've been trading now. If this is your first time, meeting me, I've been trading now from August the 1st, 2017. This is 9 years that I've been now, almost 9 years that I've been trading. It came with a lot of ups, it came with a lot of downs. Right? I experienced, a lot of success, right? But I also experienced in the beginning a lot of failures, right? And those failures is what got me to this place that I know that I'm able to educate, I'm able to share, I'm able to, help other individuals, learn this skill as well, right? Being privy, to be an educator on various global platforms as well, coaching and teaching individuals globally, right? And everybody, all right, I'm telling you, everybody goes through the same thing. Right? And that same thing is the mental game. Trading is more mental than it is the skill. Right? Listen, if you remember nothing else, trading is 10% the skill set and 90% the mindset. 10% what you do and 90% how you think. If you get the thinking right, then the doing becomes right. Right? If you think, right? So in the very beginning, here's what I want you to think. You got to think, I want to become a profitable trader. I'm not trying to hit, a home run, right? I'm not trying to hit a six, right? My aim is to become a profitable trader. So then when you look at that, when you look at the person that you need to become, then you can start to track back. No, you can start to lay out what are the habits of a profitable trader, right? What are the habits of a professional trader? What are professional traders doing? All right. Am I just trying to be another number, another statistic? Or am I trying to be somebody that really goes on and becomes a professional in this space? All right. Am I just here for a quick bag? Or am I really trying to get this skill? Because if you get this skill, it can pay you for the rest of your life. All right. So I hope that is clear. I hope everybody took notes on this. Like I said, it's more important. It's going to be more important the way that you think over what it is that you do. All right. So if you're ready, guys, put a ready in the chat. All right. I mean, of course, all of that was also part of the training, for sure. All a part of the course. You got to get the mind right first. All right. It's more important, like I said, how you think over anything else. All right. Everything else is going to be a byproduct. Okay. Awesome. Awesome. Glad to see that everybody is ready. All right. So let us jump into it. All right. Let's jump into it. Trust that everybody is seeing my screen well. All right. Trust that everybody is seeing my screen well. Yeah. So let's go. All right. Good stuff. All right. So what is Forex? Right. Let me look at it. Like, what is Forex? As you know, Forex is short for foreign exchange. Right. It's the global marketplace where currencies are bought and sold. Right. That's the simplest way that we could break down Forex. If you've ever been to the bank, if you've ever traveled before, right? Have any of you guys ever seen like the cambios in the airport, right? Or the currency exchanges in the airport? Or you going to the bank and you see all of those boards that are fluctuating with the different currencies? That right there is the Forex market. All right. We participate in the Forex market literally every time we travel, right? If you participate in stocks, if you purchase anything online, all of that is Forex because you are taking your currency and exchanging it for the currency of wherever it is that you are, wherever it is that you're purchasing from, right? And that in itself, you are participating in the Forex market, okay? So, a literal example, right? Let's say you travel to Europe, from the US, you exchange $1,000 for euros, all right? When that exchange rate is 1.10, you receive 909 euros, okay? So if you held those euros and the exchange rate becomes 1.2, and then you change back your euros to the US dollar, guess what? You actually received more money. You received $1,090. So that way, you actually just profited $90 in that currency exchange because of fluctuation in currency. Now, guys, as opposed to having to travel to do this, the Forex market, right, our Forex trading is all done digitally. Okay, it's all done digitally. So grab the concept, understand that Forex is between two currencies. Forex trading is between two currencies, all right? Your one currency is being bought, the other currency is being sold. If you travel, that's what you're doing. You have one currency, someone is buying that currency, and you are selling your currency. Am I making sense? All right, just from the very basic level, understanding this is what the Forex market is. So when you understand that literally that is what the Forex market is, when we think about the participants in this market, like who really runs the market, right? And we need to really understand this, right? When you think about who really runs this market, is the major players like the central banks, commercial banks, right? The hedge funds. We're gonna get into it. Institutions, right? We're gonna get deep into it, right? But let's help you to be clear first on everything here. The Forex market, if you didn't know, is open 24 hours a day, 5.5 days a week. All right. It's open 24 hours a day, 5.5 days a week. So when we say that the central banks run the market, they are the largest and the most influential participants in the Forex market. All right. They run things. They're the person that determines the inflation, the stability, right? Everything. All right. Like they're that person that runs everything in the market, guys. Okay. So when you look at when you see the markets rather, increasing or decreasing, is because of the interest rates. It's because the central banks are literally directly buying or selling currencies to also stabilize, all right, the economy. Also, when we look at the commercial banks, right, they are the major players in the market. You hear me say that a lot. The commercial banks are the major players in the market because they themselves, right, they themselves are trading in the market, right? They themselves trade for themselves. They're trading for clients, right? They're facilitating major transactions. So, for example, if let's say, for example, I'm in Barbados, right? Most of you are, and and I don't want to call the company name, but let's say this company want to purchase cars from China, right? Of course, China or Japan, let's say Japan wants their currency, right? Wants their money in the Japanese yen. They don't want Barbados dollars, right? So what has to happen? We got to change that money. We got to change our money from the Barbados dollar to their currency. So that's a foreign exchange transaction that has to occur, right? So the commercial banks, right, are the persons that handle that currency conversion. So the more transactions that take place, the more it affects the market. Am I making sense? All right. Am I making sense? So all of the major companies as well, right? And institutional investors, yeah. So when we say institutional investors, this is a group, right? This group of individuals include pension funds, mutual funds, hedge funds, right? Their role, all right, is to trade Forex, is to trade Forex basically, and those, well, let me say the hedge funds, right? To hedge currencies, right? And when we say to hedge currencies, once again, all those major transactions that take place that determine whether a currency, increases or decreases. So all the multinational corporations like Apple and Microsoft and Toyota, all of them are participating in these major transactions to like Japan, Asia, and all these different places that manufacture a lot of technology and so forth that we utilize. All of that, right, determines currency fluctuation, right? So, for example, nobody really trying to put money in the Barbados currency and that kind of stuff. You know what I mean? That we don't really export anything. So we don't got that much foreign currency coming in, or our dollar isn't like strong enough to affect anything. So if you ever had to search the Barbados dollar on the Forex market, you'll see like a flat line, right? You see a flat line, but then also we have governments. Okay, we also have governments, very similar to the central banks, very similar to all of the commercial banks as well, they themselves play a major role in the fluctuation of a currency, all right, because of all of the imports, exports, and so forth, right? So everybody understands. And then right, we are the retail traders, or actually miss brokers, right? The brokers as well now facilitate, and this is going to be very, very important. Brokers facilitate all of our transactions. All right. Brokers facilitate all of our transactions. Right. Um brokers are also playing in these markets. Yeah. Brokers are also playing in these markets, and it's very important the broker that you also select to trade with, because then there's manipulation that occurs. Right, some brokers, like what I would call a pop down broker, right, literally would trade against you. So if you put a position in the market, they would put a position in the opposite direction because their aim is to make you lose. Mm-hmm. 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 Right? So it's very important, the broker that you trade with, right? Some brokers delay the execution of a trade, yeah, so that you can enter the market at a later point, putting you at a disadvantage, right? Some of them take very long to make withdrawals. Yeah. All these different things. And this is where it's important, like I said, the broker that you choose to trade with, right? Now, and that's why, like we speak specific and highly of certain brokers. Okay. All of you on this session, you should have an account with PU Brain. Yeah. So, it's like I said, over the years, very important, man. Very important who you choose to trade with. I've experienced a lot of things, when it comes to brokers. You profited and so forth, then you can't get your funds, all that. Like, you don't want to be in positions like that, right? And actually, guys, on the 8th, all right, we're actually gonna have, I don't want to let the cat out of the bag, but we're gonna have some information on brokers, all right, by some top individuals, all right, coming into the island to share. So you guys listen, don't make sure you are at the event as well, right? But more information and stuff is gonna come on that, all right? Don't let me stray. All right, but then we have the retail traders, right? Retail traders are individuals like you and me. Now, guys, listen, you do not move the market in no way, shape, form, or fashion. Right? You do not move the market. We are literally here to participate in what is going on. Okay? There's no amount of money you can put in this market. I mean, you've got to be a billionaire, right? To move the market. We do not move the market. We are mere participants. We are the smallest players in the market. We are the most, but we are the smallest. Okay? We are the smallest players in these markets, right? As you guys can see here, though retail traders represent a smaller portion of the overall market volume compared to institutions, they have grown significantly due to the accessibility of online trading platforms, right? Now, understand this, before the year 2015, I believe it was, you couldn't just get into this market of trading like that, right? Like, this was reserved for the elite. And this is what I want you to really understand what it is that we have here, because trading was reserved for the elite, right? You could not get into the Forex market like that. You had to have at least like $1 million to step into the market, right? But because of different changes that would have occurred, right, it would have made trading, and, because of brokers and so forth, it would have made trading now more accessible to the average person. Yeah. So because the barrier of entry can be so low, because I'm telling you, like some of you know, you can tap into the Forex market with as little as like $50, right? With as little as like $20, because the barrier of entry is so low. It tends to determine the way that we treat this market. And I don't want that to be you, right? Because the barrier of entry is so low. Remember how massive the industry is. It generates 9.6 trillion, right? $1 trillion a day, right? A day. right? And I'm emphasizing that because I know we could get caught up, man, I only deposited $20 or $50 or whatever, so that we tend to treat it like a $20 mindset, or with a $50 mindset. Yeah. So change your perspective. Okay. I'm telling you, that's going to change. It's going to change your life. All right. So let's talk about the market hours. All right. Let's talk about the market hours. You've got different trading sessions. All right. Now, some of you may have noticed information, you may not. All right. You've got different trading hours or different trading sessions. Let me see. When you step into the market, all right, there's four of them. There's the Sydney session, there's the Tokyo session, right? There's the London session, and then there is the New York session. Okay, so there's the Sydney session, there's the Tokyo session, there's the London session, and there's the New York session. Sometimes you might hear just three, all right, and you might hear, for example, the Sydney and the New York session may be coupled together and called the Asian session, all right. And then you'll hear the London session and then the New York session. Okay, so you see each session, of course, has an opening and closing time. Okay, and then there's specific currencies that move in these times. Okay, there's specific currencies that move in these times. So you want to pay attention, to, of course, the time that you're actually trading. So when you look at the Sydney session, for example, the Sydney session, right? The Sydney session, in that session, the Australian dollar, right? The New Zealand dollar, they're big in that time. Okay. All right. They're big in that time. All right, they're big in that time. The Tokyo session, appears like the Japanese yen, same Australian dollar, the New Zealand dollar, right? That's when they get a lot of movements, right? You see the opening and closing time of this in the session, 5 p.m., close at 2 a.m. Okay, the Tokyo session opens at 7 p.m., closes at 4 a.m. Okay, the London session opens at 3 a.m. and closes at 12 p.m. Okay, and the London session, currencies like the euro, the Great Britain pound, the Swiss franc. Okay. Also, in all of these sessions, especially the Asian session, commodities, so such as gold, silver, right? They have a lot of movement in that time. Why? Because Asia and or let me say Australia, is heavy in the commodity market. All right. So that's why, so the AUD, New Zealand dollar, right? Those currencies play a major role, right? Play a major role in the movement, of like gold and so forth as well. Okay, so very important to know. Yeah. Then we have the New York session, all right, which of course would be pairs like the US dollar, the Canadian dollar, right? It's open at 8 a.m. to 5 p.m. So that's the time most of us are up, right? So for sure anything with the US dollar, anything with the Canadian dollar attached to it, right? That's when you've got a lot of transactions are there happening in that time. Think about it, because that's when the banks are open. Yeah, that's when the stock markets are open, right? So that's when a lot of transactions are basically going on and causing the market to move, right? To jump. Okay. So what's important now, I know usually then what happens is that individuals then ask the question, okay, well, okay, I see there's different sessions. What's the best session to trade, right? It's not necessarily the best session to trade. It's making sure that in these sessions you are trading the right currency. Okay. Now you don't want to trade, for example, in the New York session, the Australian dollar to the New Zealand dollar. All right. You know what I mean? Like nothing ain't going on in that time, bro. Or the Australian dollar to the Swiss franc. Nothing ain't happening. All right. You want to trade currencies that have volume, that have movement behind it. All right. That transactions are occurring, that the markets are going to move. That's what you want. When you're trading, you're looking for movement. Okay. Some currencies, they move faster than others, right? Some currencies have more volume than others. So it's just for you now to decide, okay, what currency am I going to trade in these different sessions? All right. So the best times to trade. I want you to write this down. All right, I want you to write this down. Very, very, very important. All right. And as you guys know, it will always say, think about trading very logical. All right. Think about trading very logical. When we say the best times to trade, right, we are thinking when is the most volume in the market, right? When is the most volume in the market? So remember the London session, right? The London session is open, right? What's this? The London session is open at 3 a.m. to 12 p.m. And the New York session is open from 8 a.m. to 5 p.m. So between 8 a.m. and 12 p.m., both of the New York session and the London session are open at the exact same time, which means more volume in the market. Am I making sense? You guys following? Right? This means that more volume is in the market, causing whatever currencies that are open in that time to jump, to move. Okay, so we want to pay attention to that time, right? Because this is one of the most active times in the market, right? So currencies like the euro, currencies like the Great Britain pound, currencies like the US dollar, right? They are moving heavily within that time because literally both of them are open at the same time, right? Both of those sessions are open at the same time. It's the most liquid, it's the most volatile, it's the most momentum, it's the most volume, right, in those particular times, right? That New York session, London overlap. Everybody following? All right, let's put the AC in the chat if you're with me still. Yeah. AC in the chat if you're with me. Okay, good, good, good. All right, then we also have the London. Is this because the news coming through that time? Yeah, of course. So remember, news, interest rates, right? Everything, right? All those things impact the market, right? News impact fluctuation, right? When you get those interest rates, when you hear the unemployment rates, when you hear, CPI, when you hear all these different news events, of course, those things impact the markets as well. So, in that 8 a.m. to 12 p.m. time, a lot of news for sure usually takes place, usually around 8:30, usually around 9:30. That's when a lot of news events occur. Okay, so that will also influence the currencies jumping up and down and so forth. Yeah, if you're that person that you go on Bloomberg and you see CNN and you see everything coming out, like, of course, all right, those things will impact the market. Okay. um Tokyo, right? You've got the London and the Tokyo overlap, right? It's much shorter, right? But they overlap. Okay. So when we look at, for example, when we look at the London session and the Tokyo session, right? So Tokyo session is open to 4 a.m. The London session opens at 3. So you see that 3 to 4 a.m. window, right? That hour, when both of them are open at the same time, you know that the euro, the pound, the Japanese yen. So if you trade euro to the Japanese yen or the pound to the Japanese yen, like, you should get some good movements, within that time frame because that's when both markets are open. Okay. So that's the most volatile time in the market, right? I think it's important, you take note of that so that okay, well, these are, some of the best times to trade. Now, granted, this is not to say these are the only times to trade, right? Because remember, within the Asian session, you get a nice set of movement, right? With gold as well. I would say that in every session, gold is good to trade. Like, I've never really seen a slow session, especially after this last year. I've never really seen a slow session for gold. Like, gold is just always moving, right? And remember that gold is a safe haven, right? So with all the wars and everything that's taking place, individuals are putting their money in gold because it's safe, all right? Like, over the last couple of years, or for history, really and truly, like, gold has just been increasing in value, really and truly. Yeah. All right. So I hope all this is clicking and making sense for you. All right. So what is traded in the Forex market? All right. Currency pairs are the main instruments traded in the forex market. Each currency pair consists of two currencies, right? There's a base currency and then there is the quote currency, right? So if you go into your MetaTrader 4, MetaTrader 5, you will see base and you will see quote, right? You will see base and you will see quote, okay? Okay, so I see a question. What session would you propose beginners to start training with? It doesn't matter, to be honest. It is what session you are available to trade, right? Like there is no I would say there's no preferred session. Remember, the markets move at it's 24 hours. The markets move, right? 5.5 days a week, those markets move. The better question may be what currency to trade, right? If you're trading in the New York session, you can start with a pair like Euro USD. Yeah, like it's not as aggressive as gold. I know a lot of people gravitate towards gold. Gold is a stepping. You get there, right? But Euro USD, you could start. Trade Euro USD. You could start to trade with, GBP USD. In the Asian session, we see pairs like the Great Britain, the pound to the yen. All right, so GBP JPY, right? And we're gonna get into it, right? And then like euro to the JPY, right? Those kind of pairs you can start with for sure. All right. So what we were saying, so there's a base currency and there's a quote currency, right? The price of a currency pair, all right, tells you how much of a quote currency is needed to buy 1 unit of the base currency. So for example, if you have euro to the US dollar, euro is going to be your base currency, the US dollar is going to be your quote, right? So if you had to go to the chart, for example, and you do a search, or rather you just go to your trading, your MetaTrader 5, and you go to euro to USD, you will see the value, right? You will see the value of the currency. So basically 1 euro will be valued just about 1.14, right? 1.14 US dollars, right? So you need 1.14 US dollars to get 1 euro, right? Literally, that is what you are seeing on a Forex chart. Remember, to the right of your screen, and I'm going to show you here in a bit, to the right of your screen is just price. Okay, to the right of the screen is price. At the bottom is time. Okay, the price seen at the right of the screen is that quote currency. Okay, it's that quote currency. The first one is always see it as 1, right? This is 1 euro, and the price, the currency is whatever the quote is. Okay, so these are major currency pairs. You have euro to the US dollar, right? These are the most liquid and widely traded pairs in the forex market, right? Euro to the US dollar, Great Britain pound to the US dollar, USD to the JPY. So that's a good currency as well. You can trade in the Asian session. USD Swiss franc, to be quite honest, this pair is very slow. I don't say it's slow, it's very manipulative. All right. Very manipulative, so just be careful. All right. Then you have the Australian dollar to the US dollar, and then there's the US dollar to the Canadian dollar. Okay. So those are the major currency pairs, right? There's majors, and then there are minors as well. All right. So minor currency pairs are cross pairs, all right? They don't include the US dollar, yeah, but they involve major global currencies. So for example, you've got the euro to the pound, okay? The euro to the pound. There's also the Japanese to the yen, right? There's also the euro to the Australian dollar, okay? Then we have some currencies also known as exotic pairs, all right? These are like very volatile pairs. Okay, so you gotta be careful with these as well if you ever attempt to trade them. Right, a couple years ago, I used to trade USD to the South African rand, right, and also USD to the Turkish lira. Right, there's also the euro to the Turkish lira as well. So exotic pairs involve one major currency pair paired with the currency of a smaller emerging economy. Okay, so you see major currencies and smaller currency pairs right here, right? Smaller emerging economies, all right? These pairs are less liquid and more volatile. Okay, they're less liquid, but they're more volatile. So you see a lot of movements. They can move like how gold would, for example. All right. So we also got commodities, right, which we trade a lot. I trade a lot of individuals trade gold, and not many individuals trade silver. Silver, you got to be a little bit more. You need a bigger balance. Let me say to trade silver, right? Silver tends to move even bigger, or rather pay out even bigger than gold does. Okay, so be very mindful of that, right? But when we refer to the commodities market, we're talking about things like gold, we're talking about silver, we're talking about oil. Okay, many individuals trade oil as well, and they're also talking about agricultural products as well, right? That are traded as contracts. Yeah, so just very mindful to know. Like we said earlier, all right, these metals are often traded as safe haven assets, right? Especially in times of economic uncertainty. So that's when you'll see gold jumping, you'll see silver jumping as well. Okay, those currencies, they're safe havens, right? These commodities. Then we have energy, which would then step into oil. Okay, energy commodities like oil and natural gas are heavily traded, with their prices influenced by global supply and demand. Yeah. So when craziness happen, all right, that you've seen recently, you either see that jump as well in oil, or a significant decrease. Oil jumped over 100 and then it dropped. All right, just as fast. Yeah. So be mindful of those. And then, like we said, the agricultural products. All right, not every broker allows for you to trade these. All right, but then there's corn, coffee, soybean, and also very recently, some brokers, well, Prime, for example, some of you would have seen, you got the ability to be able to trade some US stocks as well on it. Ding, ding, ding. All right. All right. So we also have indices. And also, guys, right, if you have any questions, I'm gonna take them at the end, right? I'm gonna break down anything that isn't clear, or rather, as it go through, you can put them in the chat too. Also pause and answer them, because I want that you are very, very, very clear. Okay, I don't want anything to feel as though it has gone over your head. But I want to make sure that you are clear, especially with this information, right? Because at this point, a lot of things it's foundational. We send the foundation. Make sure you get the information, make sure that you're clear. It doesn't feel like, oh my gosh, right? And let me ask you this, right? Is there anything that you would have heard so far that you did not know, right? That you did not know. You got some of that. So that's what, okay. Right? So that's why that's be happening, and so on and so forth. Anybody got that kind of like bulb go off in their mind in the session so far? Uh-huh. Kenya, okay, see you, right? Okay, I see you, I see you. Anybody else? Okay, good. Yeah. Okay, perfect, perfect. All right. So you've got indices. Indices are also a different beast. Right? Like there's levels, guys, right? And let me explain that when I say levels. Everybody starts with a Forex pair. Okay, everybody starts with a Forex pair. Then we graduate, into things like gold. Some people are afraid of gold, right? So you either graduate into gold, oil, or indices. Okay, most run away from gold. People are afraid of gold. All right, and that's why probably I started to trade gold. Yeah. But indices are also a different beast. So if anyone ever heard about the S&P 500 before, or maybe the Dow Jones, right? Maybe if you watch a little CNN and so on, right? Maybe you see them come across at the bottom of your screen, right? Never knew what it was, or you heard about NASDAQ, right? All those are considered to be indices, right? So indices represent the overall performance of a group of stocks, okay? So you got the ability to trade that, yeah? Typically from a specific country or sector, rather than trading individual stocks, right? Traders can speculate on the movement of an entire index. So the S&P 500, right, tracks the performance of 500 of the largest companies in the US. Yeah, you can trade that. The Dow Jones, right, includes 30 large publicly owned companies in the US, right? And then the NASDAQ primarily composed of tech companies, right? Now, when anything major happens in the world, trust and believe, you're going to see these currencies, right? You're going to see these indices jump or dip, okay? Because remember, like, if something major is happening in the world, and these are the largest companies in the world, then you're going to see the effects here, okay? So, for example, you guys remember 2020, COVID. Everybody remember that, right? I think it goes without saying. 2020 was COVID. In 2019, the Dow Jones was showing, the Dow Jones, the S&P 500, and the Nasdaq were showing signs that they were about to drop off, right? That you were seeing this slow trickle up in the market, slow movement up. Nobody knew when it was about to happen, but you could see the signs that something was about to happen. That was the end of 2019, all right? So November, December. Here comes February 2020. Boom, shut down. Markets drop off, like drop off. It was ridiculous, right? Just drop off. So, of course, anything major that happens, you're gonna see it affected here, within these indices or these index as well, right? There's also European indices, right? The FTSE, also known as the UK 100, right? Better, that's what you're gonna see on most brokers. All right, UK 100, it represents the 100 largest companies listed on the London Stock Exchange. There's going to be the GER 40, right? So the GER 40 tracks 40 major companies from Germany, and the FRA 40 represents 40 of the largest French companies as well. Okay, there's also the Tokyo Stock Exchange, right? Which is the JPN 225. Right? You hope you guys learning something here. Right? And then the HK50, which represents the largest companies in Hong Kong and the largest companies in Tokyo. Okay. So not many individuals trade these though, to be quite honest. Right? Not many persons trade them. More so individuals are trading the US indices, and then some persons that I know, and those few traders that tap into like UK 100 and GR 40, right? But most popular, US 30, US 100, US 500, silver, oil, gold, right? And then typical Forex pairs, right? Those are the most popular traded pairs in the industry, right? So guys, it is exactly 8 o'clock, all right? So the next session, we are going to get into, we're going to get into pips. We're going to get into understanding pips, right? How to calculate those pips, right? We are going to also bring it on to, we're going to bring it on to MetaTrader 5, right? So that you can get a clear understanding of it, right? See it working, and also Trading View. Okay, so I want to encourage you to get a few things, all right? If you don't, one, download the app MetaTrader 5. Okay, download the app MetaTrader 5. MetaTrader 5 is where you are going to be trading on. Okay, MetaTrader 5, that's where you do your actual trading. I mean, that's where you click buy and sell. Okay. Trading View, so tradingview.com, or it's also an app. Trading View, that is where all of your analysis is done. All right, so we're going to show you there how to calculate pips. We're going to show you there, all right? We're going to show you there, how to understand, right? How to understand, what to say, the difference, right? The difference between how to calculate pips between commodities, how to calculate pips between the Japanese yen, and also typical Forex pairs, and also the difference with calculating pips on indices, okay? So you're going to get all of that information. Then we're going to go into things like lot sizes, right? So you're going to understand lots. You're going to understand the different types of lots. You're going to understand the value of those lots. You're going to understand how these lots directly correlate with the amount of money that I can make or lose, right? Which is extremely important. most individuals tend to skip this part. You know why? Because it's a low math. Anybody hated math at school? All right, let me know in chat real quick. Talk to me. Anybody hated math? All right. So most people skip this part because they hated math. But then they get surprised, right? When they lose a certain amount of money. Yeah. So don't hate math. Like money. Right? Like money. And because you like money, I didn't tell you to love money, I tell you to like money. Right? Like money so that the amount of money that you make or lose is never going to be a surprise. Yeah, and that's what we're going to take you through it in that session and show you exactly how to calculate your lots, how to calculate pips, how it formulas, etc., that you'll be able to understand, risk management, because then that's what we're going to go into as well, and understanding the different order types. Okay, so definitely, guys, be here on the next session. Let me know, man. Was the first session good? Was it enlightening? Did you get a good set of information, things that you didn't know before? All right, let me know. You can make a virtual 5 in the chat, virtual high five. All right, if you learned some stuff, all right, so be back here next week as well, okay? Because we are now unpacking everything, okay? We're now gonna unpack everything, okay? Perfect. So it was very informative. So we're gonna get a little bit more practical next week. I don't want to overload you today. We're gonna get practical next week now, all right? And like I said, we're gonna get into things like pips, lots, order types, risk management, right? We're gonna make it practical. Okay, show you some charts, how it applies to the chart, risk to reward, all those things. Now we're gonna get into next session.